Good afternoon and welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner with this as always to talk all things markets. University of Missouri, Scott Brown. Happy Friday, Scott.
Good afternoon, Megan.
It is like my favorite Friday of the month. We get to talk livestock slaughter. We get to talk cattle on feed numbers. If cold storage came out this week, which they always should, we'd get to talk it too, but we'll do that next week. But to recap, or to kick things off, let's recap what happened this week in the markets.
Yeah, so we had a pretty good week this week, Megan, in markets. We start on the cattle side. Fed cattle prices about $3.30 higher on the week. Those feeder cattle markets were generally steady, but we had some instances of $8 higher feeder cattle this week as well. So pretty good on the cash markets. December live cattle futures contract was up $4.60 on the week, and the November feeder cattle futures contract was up $3.20. We also saw stronger choice box beef prices this week, up a little more than $5.60. That really trimmed away at the change relative to a year ago. Now only trailing a year ago by about $29. On the hog side, cash barrels and gilts were about 25 cents lower on the week. Those December lean hog futures contracts were up strong, more than $6.75, and the pork cutout value up slightly, but really basically unchanged on the week.
Scott, as we take a look at, I want to talk on the cash side of things, just in general. How do you anticipate us going in and kind of filling out the rest of the third quarter here as we talk cattle numbers? And specifically, there were some really, you mentioned some pretty impressive numbers this week. It's been really interesting to watch, especially after some of the recent moves we've had.
Yeah, so to me, I think maybe on the cattle side, we're seeing the beginning of what's going to be a continued stronger cattle price outlook for really the foreseeable future. So this might be the big push higher that I think many of us have been calling for some time now. I don't want to be too giddy too quickly, as I think we're still talking about slaughter runs that are reasonable levels thus far, but that certainly could get a lot stronger. And again, just I think some better general strength across the board. And I say a stock market that also was, I believe, is going to end up higher here on the week. Maybe a little more positive or a little more optimism in these markets than we've seen for a while.
Let's talk slaughter numbers, and then we can get into livestock slaughter and cattle on feed. As we take a look at those runs this week, really another solid week of slaughter numbers.
Yeah, that's correct. You start on the cattle side for the week ending October 22nd. USDA says a run of 673,000 head of cattle this week. That's 13,000 head more than we did last week and 11,000 more than we did the same week a year ago. On the hog side, a pretty good run as well, 2.571 million head of hogs this week. That's 26,000 more than we did last week, and down 35,000 though from where we were a year ago.
As we take a look at the percentages year over year, we continue to grow on the cattle side of things and tighten things up, at least on the hog side for right now.
Yeah, so we're 1.6% higher according to that data year to date versus 2021. And on the hog side, we're down now just 3% relative to a year ago. And I shouldn't say just 3%. It's been a long time since we've talked about being down this amount, but we certainly have been moving to being down less as we've gone through the last several weeks.
Before we get into cattle on feed numbers, let's talk livestock slaughter. And I think the theme here is that we're definitely not growing the cattle herd anytime soon.
Yeah, it sure seems that way from the numbers that we get out from USDA in terms of the livestock slaughter report. We'll start on that front. So beef cow slaughter for September, 8.3% above a year ago. Continues to tell me we're liquidating. And when you look at year to date, Megan, beef cow slaughter 13.1% above year ago levels year to date. Just again tells us we're getting rid of cows, tells us the drought and lack of profitability both I think have been important there. However, it's not just beef cow slaughter. You look at heifer slaughter for September, it was 8.1% above year ago levels and is running 5.2% above year ago levels when we look at the year to date numbers. And just for contrast, steer slaughter down 1.3% year to date. Just to put a little perspective here. All right, so total cattle slaughter up 3.9. That leaves us beef production for September that's 4% above year ago. So we're starting to see that growth. And again, cow slaughter having a lot to do with that. Year to date, beef production up 1.9. On the hog side of the equation, hog slaughter down 0.9%. So again, we've been catching up relative to some fairly short numbers that we started early in the year with. And when you add to it a September hog dressed weight that was up 0.5%, that made September pork production down just 0.3% relative to a year ago. And when you look at production, because of those heavier weights now, we're talking about year to date pork production down 2%.
I feel like we're not talking a ton about the hog side of things, and I feel a little guilty, but I think this big story right now is what's going on the cattle side of things. And if we're looking at an 8.3% increase in beef cow slaughter and 13.1% year to date, that's not something that's going to fill or be rebuilt anytime soon. What does that mean for long-term beef production? And then I ultimately think about supply and demand on the consumer side of things.
Yeah. So the hole just gets deeper, right? So I say in the current situation, beef production's higher than it otherwise would be. So beef production in September up 4%. Just reminds me to say out loud, we're producing more beef right now because we're slaughtering more beef cows. So we're getting more supplies in the short run. Once we get over the other side of that hill, though, it's a lot further to the bottom, it would appear, especially when you add the combination of this 13.1% increase in beef cow slaughter and a 5.2 in heifer slaughter as well. We're not holding back females and we're getting rid of the ones we have. So the question, I think, becomes just how high could retail prices go and what effect would that have on consumers? You know, we often talk about, do prices get so high that we choke off demand? And we've not experienced that the past few years. Demand's been strong, continues to be strong, different than consumption. So at these higher prices, we're going to consume less because there's less supplies available. Do we, however, hurt demand? Do we shift demand to the left? We likely see some cheaper pork and chickens getting a little cheaper now as well. So that could factor in. And I worry about that long-term demand picture, just given how short supplies could be here for a period of time.
It's one thing if input prices are high and demand or prices received are also high and demand is holding. But if input prices stay high and prices fall back for producers, that puts a really dark cloud. And I hate to be like a negative Nancy here on a Friday afternoon, but it's a really uncertain and volatile cloud looking ahead.
Yeah, so I think it is important to remind us that despite higher cattle prices, margins have not been that good. I like to remind us all the time, drought matters, profitability matters in terms of what we're doing today. And I think we have to keep both of those in mind. To me, it looks like input prices stay high. I always say, for me, the scenario that could play out, good crops in South America. We plant a lot of normal acres here in the U.S. next year and talk about more like trend yields because we're off trend this year with what we're seeing out of this harvest. Could lower feed costs, but I think the rest of the input prices, stay fairly high. And, by the way, I think it's important to remind ourselves about, although we're getting higher than expected production of beef now because we're slaughtering cows, when we hold heifers back to build the herd at some point, that's going to make us decline even further than we otherwise would. So, what we're doing today has the effect in the bottom of the cycle of pulling us lower as well in terms of available cattle slaughter.
It's a very interesting picture that it lines up. And I think it also begs that risk management conversation that I'm sure we will continue to have weekly or at least quite frequently here between us.
Yeah, so I will say I think there are going to be opportunities to reduce risk. I hope we don't get so focused on prices going higher that we don't want to forget at some point in time letting someone else have that risk may still be a good strategy.
Cattle and feed numbers out this afternoon, and pre-report expectations were spot on. Let's talk through a little bit of those numbers and what you're taking from this report.
Yeah, so number one, I'll say I don't think I've ever seen a report as close to pre-report expectations as we got out right now. The only frankly difference was marketed in September, and the actual number was 104.0, and the pre-report estimate was 103.9. To talk about just how different, but the other two were hit head on. Placed in September, came in at 96.2 of a year ago. When you look at the by weight differences here, so less than the 6 to 699 and 7 to 799 weight categories really stick out to me in terms of what we're doing. So perhaps we're starting to see where we're going to get much tighter as we look ahead in terms of those placement numbers relative to year ago levels for the rest of this year.
I would assume the report is fairly, especially that placement number, fairly favorable to markets, but does that kind of hinge on, as long as demand remains strong, like this is a really good, not really good, but right, we're in a better pricing position moving forward?
Yes. So I think the point you're raising is incredibly important to say out loud. We all talk about these higher prices. We all are getting used to what's been demand that's been strong, and we could take a little bit of the shine off of where these prices could go if demand were to weaken. I'm beginning to see more forecasts for real GDP with a minus sign in front of it for 2023. Does that at some point have some demand implications? So again, I think it's important to say we might take a little bit of the shine off or the high off these prices if demand were to falter. Now, the other interesting thing out of this on feed report as well that I don't want to lose. So percentage of heifers on feed came in at 40%. That isn't a record, but near the high. And again, I'll just remind us, in 2015, we were about 31%. That 9% growth that we've seen clearly is just another indicator that we're not holding heifers back, besides the fact we've been increasing slaughter.
How much are we, obviously, we're in a drought situation in parts of cattle country, and these aren't situations that are going to be alleviated by a couple of rain showers. This is a long-term impact. How much, as we wind things down today, Scott, does that impact what happens moving forward as well? When you're looking at some drought, we've talked a lot about maybe, females getting moved to another part of the country. But if we're dry in the Southeast, or we're starting to get drier there, how does that kind of shape up?
Yep. We're certainly seeing what's been drier weather continue to move east. As we look at the data, and I think when you look at some of the states that have seen multiple years of this dry weather, spring rains next year probably don't get us out of that. You got to get pasture to reestablish, regrow. That's not a few weeks proposition. That's a longer term proposition. I think as it does, cattle will come back to some of those places, because some of the driest areas we see There's probably not that many options except pasture for some of that. So I could see it coming back. But I think it just makes it that much harder for us to grow the herd back very quickly. Now you want to be more negative Nancy in terms of cattle supplies. You just extend this drought and move it east in 2023, and one can talk about things that we just haven't seen for decades in terms of some of the impacts. So we'll see. The flip side of that is we get a lot of precipitation this winter. We get a lot of early spring rains next spring, and we'll change our outlook. But right now, we're just certainly continuing to see that dry weather. It seems like it's spread as we look at where we sit today.
Well, I'm not taking responsibility for that negative Nancy comment. That's all on you. Scott, it's always great to see you. Great conversation today. I always appreciate your insight as we look ahead to next week. Cold storage. What are we watching for in those numbers?
Yeah, I think we'll continue to, so we've seen some building as we've looked longer term in terms of cold storage stocks of red meat and poultry. Nothing except kind of getting back to where we were maybe pre-COVID. It's going to be interesting to see whether those stock levels continue to build when we get the report out next Monday.
I think next week might be a great opportunity for us too to kind of start having that conversation about risk management a little bit more, and maybe digging into resources and tools that are available to producers to think about as well.
That sounds great.
Scott, great to see you. We'll see you next Friday.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And for market updates, Market Minute is back with John Perkins. Check that out on your afternoons after the close. Have a great weekend. I'm Megan Rebner for Brownfield.